$250,000 Bitcoin sounds like something out of a sci-fi movie, right? Well, hold on to your spacesuits, crypto crew, because that's exactly what some top analysts are predicting for Bitcoin by 2025. Now, is this just another wild guess, or is it a glimpse into the crypto future? In today's video, we're blasting off on a mission to decode these bold predictions. Today, we've got some thrilling updates: MicroStrategy's $800 million convertible note offering, whale activity affecting Bitcoin's price, and bold price predictions of Bitcoin hitting 200K by 2025. What does all this mean for Bitcoin? Well, stick around because you won't want to miss this. First up, let's talk about the immediate market reaction. How has MicroStrategy's latest move impacted the Bitcoin price, and what are the key factors at play? MicroStrategy is at it again. $800 million in convertible notes offerings to buy more Bitcoin. This isn't the first time that MicroStrategy has made it in the headlines with their Bitcoin investments, and it probably won't be the last. Michael Saylor's strategy is very clear: accumulate as much Bitcoin as possible. But what does it mean for the Bitcoin price and the Bitcoin price predictions? Historically, such announcements have led to a very bullish market. The net proceeds from the sale of the notes were approximately $786 million after deducting the initial purchaser's discount and commissions and estimated offering expenses payable by MicroStrategy. MicroStrategy intends to use the net proceeds from the sale of the notes to acquire additional Bitcoin and for general corporate purposes. Now, despite heavily investing in Bitcoin, which has surged roughly 700% since early 2020, MicroStrategy continued to report massive losses in 2024, with a reported net loss of $53.1 million in the first quarter of 2024. MicroStrategy is yet to adopt the new digital asset fair value accounting standard, which would consider Bitcoin's price movement in the market value. But that's not all. Bitcoin whales are making waves again. What does recent whale activity tell us about market sentiment and the future of Bitcoin? Recently, the Bitcoin whales have been on the move, with significant amounts of BTC being transferred to and from the exchanges. This activity often precedes major price swings. When whales start selling, it can lead to a Bitcoin price drop, but it can also create buying opportunities for smaller investors. How does this whale activity impact the Bitcoin price prediction, and what can we expect moving forward? Well, data shows that Bitcoin paired up with USD on the Bitstamp data was hitting $66,455 before Wall Street opened. Those gains barely lasted, however, before a turn in the market sent the pair down a full $2,000 lower. Analyzing the latest price movements, trading indicators put the blame firmly at the whale's door, as it appears whales were spoofing bids in the order books. Now, let's get technical. What do the charts say about Bitcoin's current state and future price movements? Let's break down the Bitcoin technical analysis and see where things might be heading next. Looking at the Bitcoin chart today, several critical patterns and indicators stand out. Bitcoin has recently hit resistance near $66,500, and technical analysts are watching this level closely. Using tools like moving averages, the relative strength index RSI, and Fibonacci retracements, we can identify potential support and resistance levels. The Bitcoin Elliott Wave theory count also provides insights into possible future movements. By understanding these technical aspects, we can better navigate the current market conditions and make more informed decisions. Okay guys, so here we have Bitcoin paired up with USDT. We're on the one-day Binance chart, and as you can kind of see, yesterday we had that high at $66,482, getting resistance on the yellow line and the blue lines here. The yellow line is the 50-day simple moving average, and the blue line is the 50-day exponential moving average. These are resistance for us since we lost them on the 18th of June, and as we came down to our expected range. Our expected range was between $62,924 and $64,235, and on the 18th of June, we came down to a low of $64,060. Okay, so we already finished our Y wave technically here, but we can still see a little bit more slippage potentially back into this range. This is going to be a range between 62,900, 64,000, let's say 300. It's going to be the area of buying pressure, right? That's where basically some buyers are finding value for BTC. The resistance, however, on that 50 simple day moving average and 50 exponential day moving average on the daily time frame is going to be a concern for some traders, right? This is going to be a problem area for BTC. Now, I'm not expecting us to kind of continue this move to the downside on the Elliott wave theory count. And if we do throw in our smart money concepts, which was this one right here, you can see that we're also fighting equilibrium. So this is an area also that's likely to be resistance. If we do lose these lower areas, then unfortunately we're going to see more slippage to the downside, more towards kind of the 59K, potentially heading down towards that $57,817, which is our 200-day exponential moving average. Okay, so at the moment we don't have to concern ourselves with that terribly too much, but we should be aware that there is some areas of concern in the price chart here for BTC. Now, if I go ahead and bring up our kind of volume profiles, you can kind of see how volumes started to spike up again most recently on the 18th as we started to see a little bit more selling pressure coming in. Turn off the volume profiles and bring in the relative strength index. You can see the relative strength index, the yellow line coming through the chart here, has started to move down quite aggressively. It's currently sat at 37.89, which is obviously below the mid-level. Once you're below that 50, indicating basically bearish movements for the relative strength index. So the trend is to the downside according to the RSI. However, if we turn the RSI off and bring in the stochastic RSI, and we bring this one into view, we can see that we're already down in this oversold area, along with the weekly chart and the 4-hourly chart, and therefore I'm expecting more of a move to the upside. Now, it's obviously on the daily and the weekly, these are more macro views, indicating that we can still stay down here for a little bit longer. So not necessarily saying that we have to see automatic rallies or anything like that for BTC, but we should be expecting some more volatility, I think, in the kind of the medium term. We are going to be looking for a rally to the upside over probably the next few weeks, being down in this kind of range that we're being ranging in at the moment. So if I come up into our price chart here, you can see that we might find more resistance on the 50 EMA, the 50 SMA, but if we can get a closed position above this area, it's going to indicate a bigger run to the upside overall for BTC. Okay, so just be aware that things on the daily time frame are in that kind of state of flux, essentially meaning that it can kind of go either way. Traders are being very cautious. We don't necessarily know exactly what's going to be going on with the US, the interest rates, and those are going to have a big impact on the financial markets, Bitcoin included in that. So I think there's a lot of caution going on at the moment, but I am seeing a lot of positivity with certain things that are going on, specifically with some of the more traditional ways of looking at the market. So all eyes are going to be on BTC over the next probably 4 weeks or so as we start to go into July and see how July kind of reacts to various different kind of economic factors. It's going to be an interesting one to keep an eye on. But history often repeats itself. What can we learn from past Bitcoin price movements and market reactions to similar situations? Let's take a look at some historical data. Historically, Bitcoin has experienced significant volatility, but it has also shown remarkable resilience. For instance, during the 2017 bull run, Bitcoin reached nearly $20,000 before crashing down to around $3,000. Despite these drops, Bitcoin has consistently bounced back stronger. By comparing current market conditions with past events, we can gain insight into possible future movements. This historical perspective is crucial for making informed Bitcoin price predictions and understanding the broader crypto market dynamics. And here's the big one. Analysts are predicting that Bitcoin could hit $200,000 by 2025. Is this realistic? And what could drive such a massive increase? According to Bernstein analysts, Bitcoin could soar to $200,000 by 2025, driven by spot Bitcoin ETF flows and increased institutional adoption. This prediction is based on several factors, including the limited supply of Bitcoin, its growing acceptance as a store of value, and the potential for significant capital inflows from traditional finance. While such predictions are ambitious, they highlight the growing confidence in Bitcoin's long term potential. What does this mean for the Bitcoin price prediction, and how should investors prepare? Well, to understand these things, we need to obviously take a look at the bigger macro picture for BTC. So here we have Bitcoin paired up with USDT on the 1 week Binance chart. And this chart shows us some interesting things. Obviously, over here on the right hand side, we have that peak of 2017. We have that initial kind of crash towards that $3,000 Bitcoin. And then obviously we have the double peak that we saw back here in 2021. Obviously, we did see a significant drop to the downside. Again, this being a WXYXZ pattern, finishing off at $15,500 approximately. Okay, some interesting things with all of this, right? Every time we've seen a major crash in the market, we've seen a significant surge to the upside, right? The 2017 high, everyone's kind of calling it a scam and it's dead. It's never going to amount to anything. So a significant bounce to the upside in 2019. The pandemic crash, followed by a significant surge to the upside in 2021, followed by an additional crash to the downside. Lots of fear over FTX and Celsius, Luna, you name it. It's kind of all popping off at this time. Crypto's a big scam. It's never going to amount to anything. And you then see a significant surge with the ETFs, right? But we're yet to kind of reach the peak of a bullish market. And a lot of people, as I say, are predicting out $200,000 for BTC. Now, there is something going on here in terms of the historical price movements for Bitcoin that needs to be addressed, and that is the diminishing gains over time. As anything grows, with supply growing and demand growing, there's an imbalance between those two things, and those imbalances help us drive out future price predictions. If you can understand the supply that's out there and you can kind of see an increase in the demand or decrease in demand, you can predict out those price movements. Now, there's something called an elasticity curve, and the elasticity curve here for BTC, basing in or factoring in on the supply and the demand side of things, we could see a potential surge to the upside where we kind of see a diminishing gain over time at approximately $120,000. I think 200K is very ambitious, but there is one big caveat to this. This is based on all of the historical things that are going on for BTC, and it doesn't really take into consideration traditional finance having a product such as the ETFs to invest in outside of the crypto space. That actually puts this in a kind of outlier situation where we might find ourselves with a big breakout situation and we break through the idea of these diminishing gains over time. So it's going to be an interesting one to watch. I think on my conservative side, I'm talking about somewhere between $101,000 and $118,000 BTC by the time this bullish market comes to an end. However, there is that possibility that we do see something phenomenal, like $250,000 for BTC in the longer term. You can let me know what your thoughts are on all of this in the comments down below. If you have found today's video useful and informative, smash that like button. I really do appreciate that. If you are new, subscribe. And if you haven't checked this video out, give it a click and stay well informed with everything that's going on in the crypto space.